G'day everyone, welcome to another CSBP Fertilisers Market Update. I'm Johnston and joined as ever by our Sales Strategy and Reliability Manager, Ben Sudlow. Hello Ben.
G'day Gray, good morning.
Thank you, and it's been another exciting fortnight in fertilisers. Before we get on to what's happening in the local market, there's all sorts of things happening globally that may or may not affect the landed price of fertiliser in Western Australia, including more movement on potential tariffs and global trade. Tell us more, Ben.
Well, the publications have probably not been so active in trying to predict the potential impacts of tariffs on the fertiliser trade. Earlier this week, Canada getting at 25%, Mexico getting at 25%, and China not entirely clear. And then overnight, maybe there's going to be a stay of execution on that. The general implications is probably on the US. They get around 80+% of their potash comes out of Canada. They also get nitrogen out of Canada. They get phosphates out of Mexico. And if you put a 25% tariff on, that's clearly just going to go through to the US farmer in terms of price. And then you start getting very odd things happening, such as weird trade flows. And there was one I read this morning, which was, the lowest cost producer, if there's a 25% tariff on Canadian potash, the lowest cost producer to go into the US becomes Russia. Now that's a very odd outcome of a tariff on your nearest neighbour. The US, Canada, Mexico, clearly the talk of the town at the moment.
So when the last set of tariffs that impacted the fertiliser or trade restrictions that impacted the fertiliser market happened after the Russian invasion of Ukraine a couple of years ago, we saw there was a spike and a disruption in global fertiliser markets, and then it's taken a bit of time to settle down, but as you say, trade flows have sort of rebalanced, but rebalanced at a net higher cost position is sort of our read of the situation. We think something like that could happen again, possibly not so extreme.
That's exactly the situation. First thing that's really worth pointing out that at the time, the US government, on the basis of the lobbying from the farm lobby groups, they didn't sanction Russia.
So you had the Europeans putting sanctions on Russian product, but not the Americans.
Exactly, and you saw then, you saw Russian product wasn't going to Europe and it was going across the US, and then US product, the same US product, the same product was heading back to Europe. So this incredible, economic waste was being created, hence that the whole floor of fertiliser prices globally sort of moved itself up.
Yeah. So how it's all going to play out, I guess you'll keep watching the publications and time will tell. In terms of, is there any movement in FOB pricing at the moment and the macronutrients as a result, particularly what's happening in nitrogen markets, I guess?
I mean, this creates a sort of degree of short-term uncertainty, and I think if you're sitting in the US, that's going to be the most prevalent thing. There's probably one thing worth quickly touching on, Gray, was the European Commission also have brought tariffs on to prevent Russian imports of ammonium phosphates and nitrogen into Europe, and what does that mean in terms of trade flows as well? So the combination of the US and the potential announcement from Europe, which is slated to happen in the middle of the year, creates this uncertainty. So in terms of nitrogen prices, and since we last spoke, they've moved up, but that was pretty much on the back of the recent Indian tender. And if we're not talking about India, well, we always seem to be. They looked for 1.5 million tonnes. They took just over 500,000 tonnes, and that just held the price up, and was probably up around $20 since we last spoke.
Yeah, and that gets compounded. We've been talking about FOB prices and exchange rates, and exchange rates get influenced by all this tariff chat as well, but the exchange rate hasn't really moved in a positive direction either since we last spoke.
No, we've become used to a low exchange rate maybe over the weekend just gone, and we got a shock when it dropped by whatever is a cent or thereabouts only yesterday.
Yeah. So we've talked about tariffs, you've talked about the United States, Europe, Indian tender and nitrogen, and all that's washing through to ultimately a higher landed price of nitrogen in the West Australian market at the moment?
Right now. And look, how long does it last for? I don't know. We just don't know, Gray. I think the message we've pointed before, and that's still the same now, is that urea in terms of nitrogen source, if you compare it with ammonia, ammonium sulphate and UAN, is relatively high priced, and the other nitrogen sources look relatively affordable in comparison too.
You mentioned then potash and potential disruption in trade flows for potash. Anything happening in the potash market?
There's generally genuine upward movement in potash in most markets, as we've probably seen in the last couple of months. And broadly speaking, that's flow through to some of the later shipments that we may get into the market later this year. But most of the potash for the here and now is here. We've got a bit more coming, so we're probably reasonably okay with the market as we sit here today.
And then finally, phosphates. We're starting to see some demand for collection for those growers who haven't yet contracted. They've still got ability to do that. And what's happening on the FOB there?
It's been flatlining for months, Gray. Not a lot happening. Probably the exchange rate. A lot of the cargoes are here. A lot of cargoes sailing. You know, it's probably that perhaps last cargo that sort of sits out there that may still come. But it's really now, as far as person buying it and shipping it, is making sure there's room in the sheds when the ships get here. That's the key challenge that we face here more than anything else.
Yeah, so really a message to West Australian growers is make sure you've secured your supply through a contract. Time is rapidly running out, I guess, to secure that supply. And then, let's get active with making sure it's ready to pick up and take out of the sheds.
Exactly.
So good message there on nitrogen, good message there on potash and phosphates. And we spoke last week about the urea pool offer, and we've seen some pleasing momentum in that as well. Good to see people recognising that's a good solution to balancing risk in that nitrogen market, given all that's going on. So any other, on that bombshell, any other matters we should be discussing, Ben?
I think it's worth pointing out on the pool offer, Gray. We're now in February. We're now starting to come into the time we're going to start pricing early ships for seeding. So it's starting to become the first part of the average is becoming real now.
Yeah, so as you say, Ben, we're rapidly coming towards the end of the time where we can take acceptances into that offer. A couple of weeks left really before the bulk of the tonnes start getting procured for that offer. So we really need to be closing acceptances to that. So any farmers out there looking to participate in that pool offer, make sure you're in touch with your account manager in short order. On that second bombshell, thank you again for joining us, Ben Sudlow.
Cheers, Gray.
And thank you all out there in Fertiliser World. We'll see you again soon. Bye-bye.
This podcast is provided as general information only. The content of this podcast is not a recommendation and has been prepared without taking your objectives or circumstances into account. Before acting on the content of this, you should consider its appropriateness to your circumstances and seek independent advice.